Hey, it is Clay, and I want to try something new. We had a guest scheduled to be interviewed. That guest stood us up, and I feel like I'm on prom night. I'm just kidding. I never went to prom. But I had this block of time in my schedule anyway, so I'm thinking, all right, how can I turn a frustrating situation into something? So why not do a little experimenting here, and let's just see what happens. This could be an epic failure. I don't know, but as I've learned, you don't know unless you try. So what I want to do is just kind of, I don't know if rant is the right word, but just kind of talk about some current headlines and give my thoughts on something that is very practical, that really pertains to everybody. And well, it might not pertain to you if you don't, fall into what I'm about to talk about. But I just want to, I want to get it out there because it drives me nuts. It drives me insane. And it's a situation where I'm just going to feel better getting it off my chest, because that way I've kind of shared my opinion, and whether or not you want to listen to my opinion, that is totally up to you. Who knows, maybe you've already clicked off of this since it's not an interview with or not the normal format. But like I said, let me know your feedback and I'll come back around to this. But this podcast has been built, the YouTube channel has been built, the community in general of Clay Trader has been built via feedback. There's a reason why I always read all emails that are sent to me, all YouTube comments, because feedback, you got to listen to people. Now, you can never please everybody, but feedback is welcome. So if this turns out to be an absolute train wreck, if you don't enjoy it or whatever, if you find no value in it, just let me know, please. I will not be offended. I will appreciate the feedback. But what I want to talk about here is this whole victim mentality that is really, portrayed by the general media. And I'm not going in the sense of politics. Like I've said in a past podcast, what political party do I belong to? I belong to the alarm clock political party, okay? So let's just get that out of the way right here. I am not coming at this from a political standpoint. I am coming at this from, hey, you're in charge. You need to take charge. You need to be able to think for yourself. That's the viewpoint that I'm coming from here. And it is all about the general consensus of making people feel like they don't have control, making people feel like, oh, there's only so much they can do, and it's just everything. Woe is the little person. Nothing can be done in order to improve. Nothing can be done in order to change where you're at in life. And the example that I'm going to use to kind of piggyback off of this is in regards to the tax cuts that have recently taken place. Back at the beginning of the year, I suppose that's when they went into effect. And, some headlines, and again, I don't care what news station you're watching, they all are implying the same thing, which is a bold-faced lie, and is what is really driving me nuts. And that is that somehow these tax cuts, well, it only benefits certain groups of people. And from these articles, and these are all articles that are floating around out there, I just want to read some things and just comment on them. And hopefully just, you can kind of maybe realize, maybe just kind of wake up to the fact that, the media out there is massively, I'm not going to say lying, because they're not lying, but they are misleading. They are offering up a disservice in terms of kind of what's actually going on and how things actually work. The title of this article is Tax Cut Riches Have Gone to Execs and Investors Over Workers by Nearly 3-to-1 Margin. And this comes via CNBC, and literally the first paragraph of this entire article. Employers appear to be using proceeds from corporate tax cuts to continue the practice of rewarding shareholders and executives over workers. Now, what I can't stand about this, and what is very misleading about this, is they are making it sound like shareholders and and workers are two separate things. That, you have these three different entities out there. You have shareholders, you have executives, and you have workers. And sure, they are three separate entities. So that's what I mean by it's not like the media is lying, but they are misleading because they're leaving out the fact that a worker can become a shareholder. Those two entities can bleed together. Now, sure, a worker could eventually work their way up through the food chain and eventually maybe becoming an executive, but that's kind of extremely few and far between. But what I want to get across here, and what's very disingenuous about this, and I don't know, I'm not accusing the author of misleading on purpose, but maybe they're just not aware that, well, a worker can become a shareholder. And how is that done? Well, I'm assuming you have a great idea of that if you're even looking for trading or stock market or what have you podcast, or if you're a long-time listener, then I know you're into this sort of stuff. But, well, how do you become a shareholder? Well, a shareholder means you own a piece of a company. How do you own a piece of a company? Well, you buy stock in that company. How can you buy stock? Well, you get a broker, preferably an online broker, and you can buy stock. And voila, just like that, you are a worker, quote unquote. You have some sort of job, and I don't care if that job is you're a plumber, you're a carpenter, you're an engineer, you're a pharmacist, you are a bus driver, you are fill in the blank, but you have a job. You are a worker. And I don't care, you deliver pizzas, you own your own lawn care business, you are a lawyer, I don't know, you are some sort of worker. And all of a sudden, you have become a shareholder. And what did I just say? What is the whole premise of this article? Employers appear to be using proceeds from corporate tax cuts to continue the practice of rewarding shareholders. So if you want a part of that reward, who's being rewarded? Oh yeah, shareholders. And as we just discussed, you can become a shareholder. So this whole premise that you cannot benefit, that this is not benefiting you, is just such an absolute lie. Is such an absolute misconception about how things work. And then moving into this, again, more wordplay here, but think about what they're trying to make you think. So here's a quote from the article. The recently enacted corporate tax cut is likely to deliver far more benefits to top management and investors than to typical American households. Okay, investor. I'm going to tell you this right now. Investor equals shareholder. They're one and the same. If you are a shareholder, that is the same as saying that you are an investor in that company. And what is that quote saying again? That these tax cuts are going to, far more benefit investors. Again, top management, I'll give, that is very separate. So yeah, top management, but there's this other part, shareholders and investors. Both of these words are used, and both of them are making it sound like, well, that's separate from the workers. Or in this quote, the typical American household. So I want to just quickly talk about what does the typical American household look like? These statistics come from a NerdWallet survey. NerdWallet, a pretty well-known site out there in regards to personal finance and such. But let's talk about typical. And their analysis that they've done is, based on average types of debt. Average, typical, one of the same, right? Those are like the same words. So I'm just going down through this table right now. So average. Credit cards, $16,000. Auto loans, $27,000 on a loan on something that is going down in value, a depreciating asset. Then there's $47,000 in student loans. That's debatable because if when done properly, that can be an appreciating asset that can give you a very good return on investment. So student loans, $47,000, that's a maybe, depending on if you went about that the right way. And then mortgages, again, that's a little bit different debt because that would be an appreciating asset. Pieces of dirt, real estate tends to go up over time. But the two main focus of the average, the typical household, is $16,000 of credit card debt, $27,000 on auto loans. So, okay, the typical household is not benefiting. And I bring this up because, well, how do you get involved? Yeah, Clay, I get it. You said you need an online stockbroker because when you buy a stock, you become a shareholder, and a shareholder is an investor. But that requires money, right? It does require money. And in order to have money, you have to do what to have money? Well, you have to be able to have some left over. You have to, dare I say the word, save money. So if you can't save money, then, I don't know. Is that really the tax cuts, the evil corporation's problem? No, it's not their problem that you can't save money. Now, if you don't know how to save money and you're looking for, then that's different. I mean, if You accept responsibility and say, yeah, I suppose I'm not saving money. How can I get better at that? That's a whole different mentality than, well, yeah, I don't save money, and but it doesn't matter because everything's rigged against me. I can't get ahead anyways. So what's the point? Well, no, we're discussing right now the point. The point is you can leverage these tax cuts. We've established that these people are saying the tax cuts reward shareholders, and you can become a shareholder. And yes, that does require money. But if the typical household has all this sort of debt, then I can see why it might be hard to save some money. So right off the get-go, there's a sense of a personal accountability here. And again, it's not the evil corporation's fault here. It is apparently you are not saving money because apparently you are driving around in depreciating assets with loans on them. You have credit cards, and if you're only making minimum payments on those, you're paying outrageous interest rates. But yet it's it's their fault. They don't give anybody a chance. It's all leveraged against the little guy. No, it's really not. Run a search, online brokers. There you go. That's how you become a stockholder, or that's how you become a shareholder, by buying stock. So there is no reason why this whole mentality is being shifted and why you can't listen to it. I'm not saying it's necessarily easy to become a shareholder because you do need money and you need to be able to save money. But this whole concept, this whole premise that all these are different parties and that there's nothing you can do to benefit from these tax cuts because all they're doing is share buybacks, increasing dividends, and all these sorts of dynamics that are helping me personally. I mean, I have a portfolio. I am investing for retirement. I own stocks. And yes, all this stuff is benefiting me. But do you know how I got that portfolio? Do you know how I was able to purchase those stocks? I saved money. I didn't go and spend it there, and there because I realized, you know what? Part of my long-term plan is I need to be able to save money so that I can retire someday, retire with dignity, retire in a good, solid place. And then this article came out literally today as of the recording of this. And I think this is it's just been gnawing away at me. And I think what kind of spurred me on to want to just at least try this. The title of this, and again, I'm not trying to go down, political pathway, but I want to just kind of get across the mindset here that is seemingly being portrayed by this author. And the title of the article is Why a Strong Economy Won't Save Republicans in the 2018 Midterms. And then there's a big old quote bolded here that says, only about 1/5 of Americans said they've seen any financial benefit from the tax cuts. A not unexpected result, given that the tax benefits were aimed at corporations and wealthier Americans. Oh, calm down, Clay. Let me give you a couple numbers. Microsoft, MSFT, $100. Let me think of some other numbers. Let me actually just look over here right now. What are some other... let's see here. What are some other well-known? Lowe's, $95. McDonald's, $160. Bank of America, have you ever heard of them? $29. Pepsi, $100. Have you ever heard of them? Let me bring up one more because I'm pretty sure you've heard of this one. What about Coca-Cola? $42. Let's just go with Coca-Cola. $42. That is the amount of money that it would take to become a shareholder. If you want to buy one share of stock, it would cost you $43. Is that like what wealthy is considered? 43. So unless you have $43, then it's only garnered towards wealthier Americans. What a crock of garbage that is. What a disservice that is to make people think that you have to be like some sort of exorbitant wealthy person in order to benefit from the tax cuts. If you have $43, if you have $100, if you have $160 for McDonald's, let's say, then guess what? You can start to benefit from these. That is not wealth. That is not some sort of club, some sort of requirement in order to participate and begin to reap the benefits from these tax cuts. So that's absolutely ridiculous that here they are, this, quote, were aimed at corporations and wealthier Americans. No, everybody got a tax cut. Everybody has access to this thing called the stock market. And guess what? The stock market is where who hangs out at? Oh yeah, shareholders, investors. And then this is the other thing that, I want to just get out there because it's important, whether it's for trading, and the mindset you need to have is long term, not overnight. And while they don't say this, only about 1/5 of Americans said they've seen any financial benefit. Really, 1/5. So that's 20% of the population. In other words, 80% haven't seen any financial benefit. My guess is financial benefit is like, what's in it for me like right now? Wait, I gotta wait years and years for my retirements to grow? I gotta wait years and years? No. Financial benefit is like right now. What's going on for me right now? And if it's not right now, well then there's no benefit. That's what's going on here, because there's no way that 80% of people are like, no, I didn't get any financial benefit from it. I would certainly agree that short-term wise, yeah, I'm not really getting any sort of financial benefit from, these rewarding of shareholders, because in the stock market, things take time. Investing takes time. Now we can definitely grow and grow quickly after long enough periods of time, and then you factor in and sprinkle in, that thing we call compounding interest. But as far as, are things happening right this very second? Well, no. And then in this survey right here, same article, according to a recent Monmouth University poll, only 12% of Americans said their family has benefited a great deal from recent economic growth. Well, first off, how are you defining benefit? What is a great deal? Like, what do you mean a great deal of benefit? That seems like kind of a skewed type question. I mean, benefit as in great deal, and great deal as in like, oh wow, I have all this sort of extra money in my pocket right now. Since when does a benefit need to be right now? And this is what I'm getting across. The media, these pollsters, everybody is trying to portray that unless something is like a benefit right this second, no, it's not a benefit at all. Well, if you have that mindset, then you're going to look at this whole stock market and saving for retirement and stock market and long term as a total joke. You're going to look at it as, that's not a benefit. It needs to benefit me right now. Screw 30 years from now. Screw 40 years from now. I need it to benefit me right now. Well, and not only does it need to benefit me right now, it needs to benefit me a great deal right now. Well, goodness. And like I said, this could be some sort of Democrat that put in these policies. But if that's the standards a Democrat is being held to, then that's ridiculous. Sure, it's a Republican right now, but again, politics has nothing to do with this. I just want you to really stop and think about, what is being portrayed here about benefits, not benefits, and time frames, and what people's mindsets are towards certain things. Well, Clay, you really just can't get ahead. You really can't get ahead. Well, you know what? Let's bring up another recent bit of data, and I'm trying to look for May 21st, and I'm recording this on May 29th. Now, when this shows up, it'll probably be more so, deeper into the summer. But regardless, it's recent. It's recent within the past few months. And from the Washington Post, the title, "The number of 401k millionaires hits a new high." Millionaires hits a new high. Well, think about that. So from the article, the 401k Millionaires Club is relatively small, but it's growing. The number of workers with 1 million or more in their 401k increased to 157,000. Think about that, 157,000 millionaires out there at the end of the first quarter this year, an increase of 45% compared with the same time a year ago, according to Fidelity Investments, one of the largest administrators of workplace retirement accounts. 157,000. Wow, that's a lot of millionaires. And I don't know, I self-admittedly, maybe I am reading too much into this. Maybe I'm just too cynical. Maybe I'm just the grumpy old guy, get off my lawn. But after that all quote I just read to you, the very next word of the next paragraph is the word but. So you have 157,000 millionaires that were created. That sounds crazy. I thought that was me not speaking, 157,000 millionaires. But no, that's right. We're created, all through all that sort of stuff. It's up 45%. Great statistics. And then the next first word of the next, but. But getting to the milestone status took some time. Most 401k millionaires have been saving for about 30 years, according to Fidelity. Again, maybe I'm reading too much into it, but they throw out the word but, and then they say, well, sure, there's a lot of millionaires. However, it took them 30 years. It's almost like they're discrediting the fact that these millionaires were created and discrediting them because it took 30 years. It took a long time. Once again, it didn't benefit them right away. They didn't become millionaires right away. So there's that but, because you know what? It just taken a little bit more time. And maybe they're just saying that to make people think that you just don't open up a 401k and you're a millionaire overnight. So maybe that's what that is. But just with the way the media comes across, the way they structure that and the way they put it in there, it really makes me wonder, what are they trying to convey? Like, because it takes time, it's somehow not, it discredits things. I don't know, but my point here is that things work. And here we have more millionaires up 45%. It just takes time. So just because something is not a benefit right now doesn't mean you should shove it aside. And I'm not talking about necessarily finances here, but think about it with any sort of life choice that maybe you're making. I mean, think about it in the sense of, I don't know, should I do this? Yeah, maybe the short term, there's some pain associated with it. Maybe the short term, there's some discomfort. But does it really need to, quote unquote, greatly benefit me right now, right this second? Or are there some benefits that are going to come along later on if I just kind of, go with the process? And dare I say the word, be patient? I mean, can I be patient and see their results come? But then there's that word but. However, to have this attitude of, unless something is happening right now, unless something is a great benefit right now, then yeah, it's actually just not a benefit at all. Well, that's a pretty rough attitude to have. And it's a place where it's not going to take you very many places. And then finally, the thing here that I find kind of, just a little ironic, and this will be my last kind of ranting point here before I wrap things up. But from this same article about the millionaires, where is that? I'm looking for a key word here. Right here. There's no doubt that many of Fidelity's 401k millionaires have benefited from the market's performance. But they also exhibit many of the behaviors we recommend to make the most of your savings. To make the most of your what? Savings. Yeah, you got to be able to save some money. And that's what it all comes back to. Well, the tax cuts, they don't benefit the small person. They're only benefiting corporations. Let me phrase it like this, because you should now have connected all the dots that in order to become an investor, a shareholder, you need to be able to buy stock. And in order to buy stock, you need to have money. And in order to have money, you've got to be able to save money. So let's, turn this into, these tax cuts, they're only benefiting corporations and savers. How does that rearrange things? Can you not be a saver? Is saving something that you don't have the opportunity at? I don't know. Maybe not. But as far as I'm concerned, everybody has the opportunity to save. So why doesn't I guess this is my kind of way to be the media and get it there across there. But I want to see a headline out there that says the tax cuts only benefit the corporations and savers. Because that would actually be true. If you are not a saver, then yeah, maybe you're not going to benefit at all because you're not saving money. Just, I don't, that's kind of just my thoughts, is that's who it's benefiting: corporations, top level management executives and savers. Because if you save, if you have money, you can become an investor, you can become a shareholder. And that's supposedly what all this is going on. And that loops me back to, I was curious, what are the statistics out there of people that are using a budget? A budget is like a financial plan of attack that will help you save money, will help you see where money is going. So, all right, you have all these people out there, and supposedly they're complaining about not greatly benefiting from anything. And, that's supposedly the majority of people, according to these studies, according to these polls, according to these articles and these quotes, the majority of people are not benefiting. We've established all that. So, and I'd encourage you to do this. You can do your own research. Find out, do some statistics on how many people use budgets. So this comes from a federal credit union out there, and they ran a statistic from several months ago, but still relatively new information. And it says the answer may surprise you. No, I'm not going to be surprised at this point in time. According to a recent study by the U.S. Bank, 41% of Americans say they use a budget. So I'm not a mathematical genius, but I'm pretty sure that means 59% of people don't use a budget. So let's just round that up to 60. And not to insult your mathematical and statistical analysis intelligence here, but 60% is the majority. So here we have the majority of people that aren't benefiting from these tax cuts, because in order to benefit, you need to be a saver. And the majority of people here are now saying that they don't use the budget. And what can a budget help you do? Become a saver. And where does any of this have to do with the evil corporations? Is it their problem that you're not using a budget so that you can't find money, find ways to save? And when you save, you can invest. And when you can invest, you become a shareholder. And when you're a shareholder, as all these articles admit, you are reaping the rewards of the tax cuts. I don't know. And that's why I look forward to feedback. Am I like way out in left field here? Am I just not making sense? Is my logic chain broken somehow? But when you have the majority of people complaining supposedly about this stuff, when all you have to do is become a saver, and then the majority of these people, according to these statistics, aren't using budgets, I just don't know what I honestly I don't know what to think. I don't know what to, actually I do know what to say, and I do know what to think, and I'll get to that in a second. But just realize this, please don't let the media mislead you. Don't become a puppet to the media. And I don't care if that means you're watching MSNBC or Fox News or CNN or Bloomberg or CNBC. It all sides, right, left, whatever. Like I said, I'm the political party of the alarm clock. Don't let them sway you. Don't let them make you think a certain way. Don't let them give you the impression that you can't get ahead, that you can't make a situation and turn the situation to benefit you, because the tax cuts can totally turn into a situation that benefits you. And we've walked through the exact steps of how you can do that. You gotta open up a broker. You gotta create an account. You gotta have money. How do you have money? Well, you gotta be able to save money. What's a great way to save money? Well, you have a budget. And I get it. Well, budgets are like for my grandma. Well, you know what? Sometimes old people, well, in many cases, old people have it figured out. They have a lot more life experience than we do. So I just don't want to hear it. And you shouldn't want to hear it. You should not. You should be insulted when the media throws out stuff like this and implies that people are getting screwed over because it's only benefiting certain groups of people, when one of these groups of people is something that anybody can become a part of. And I've ranted long enough. I wanted to keep this right around 25-ish minutes. I've already gone over a little bit. So I'm just going to wrap that up. And you can say, oh, Clay, I see what's going on. This is all just a sales pitch. Maybe so. But you know what? I don't care, because this stuff works. It works for me. It works for other people. It's just math and a little bit of common sense. But if you are interested in how I kind of tackle all this stuff, how I invest, how I go about saving, how I go about growing wealth, how I go about building wealth, pretty much how I go about using victim cards as toilet paper, then I do offer, that's pretty much what moneywithclay.com is all about, my other site. I've talked about it before on past podcasts, so this is nothing new. But I offer not only a course that's geared towards just getting your life under control from a financial standpoint. That is the Slab Money Method. It goes over the exact steps that I used for me personally, to pay off $163,000 in debt. And then from that point, I've just continued to build and build the wealth. I go over all of that step by step by step. It comes with all sorts of forms and guides that you will fill out along the way to ensure you're following the exact plans. And I get it, Clay, dude. Of course you're going to say that, man. It's your product. What are you going to sit here and tell us that your product is not great? Fair point. So that's why I offer a 1 year. Let me say that again, a 1 year money back guarantee on the slab money method, because if you do it, it will work. Again, I realize those are just words, but it comes with a 1 year guarantee. And then also, maybe you already got all that stuff in place and your personal finances in place, and that's great, and you're looking for more so to become a shareholder. How do you become a shareholder wisely? I do offer a Grow Rich course that is on both claytrader.com and moneywithclay.com. You can check those out. And that is my investing strategy laid out step by step by step. Once again, as a former process engineer, I just can't help myself. I lay out all the checklist and make sure that you go by, okay, step 1, do this. Step 2, do this. And, write down this, and then write down this number. And now look at these numbers. Do these. You'll know exactly what I do to become a shareholder, because, I get it. Everybody can become a shareholder, but as in many areas of life, you can become and do things that are stupid. And you can definitely do stupid stuff investing into the market. So there are proper ways to go about it. There are smart ways to go about it. And again, that's what the Grow Rich course is all about. So check those, those courses out. The slab money method, $129. I mean, come on, give me a break. Like I said, you'll be able to pay for that in a matter of very, very quickly, and it will work. And if it doesn't, which it will, that's why it comes with a 1 year guarantee, then, there you go. There's really no risk there at all. And then as far as, the Grow Rich course, if you're doing it yourself, you don't have to pay a financial advisor, and, the cost savings via not paying out those unnecessary fees will pay for the course within a year, no problems asked. So, and I started with this, I want to wrap up. This could have been a total train wreck. I sit here right now in not confusion, but in just kind of anticipation. So please let me know, what did you think about this? Maybe we can get some good discussions going on. I'm not going to, I should say that I do need to value my time. So I'm not here to get philosophical in terms of the YouTube comment section. And I'm not going to go on some, 18-hour debate with you, but general thoughts are great. And even if you disagree with me, that's totally cool too. I'm just letting you know that if everybody disagrees, or, the people that comment are those that disagree, I just can't handle all, trying to debate back and forth, because I have other things going on. I have the Clay Trader business, my trading, my real estate, moneywithclay.com stuff. I mean, there's lots of other stuff going on, but in general, the main piece of feedback I'm looking for is, did you enjoy this? Was this a waste of your time? Because if it's a waste of everybody's time, then I don't want to waste my time doing something that nobody finds value. Or did you kind of enjoy this? Would you like me to talk more current headlines and just give my 2 cents? So yeah, if you're listening on YouTube, then let me know your thoughts down in the comment section. If you're listening on claytrader.com in the show notes, let me know your comments down below the video there. And if you're listening on a general podcast play, or on iTunes, for example, I mean, can you swing by the YouTube channel, or could you swing by, the show notes page at claytrader.com and let me know your thoughts, or email me, or hit me up on social media, or any of those things. I'm very curious on your thoughts on this. This being the segment, the idea here. And I'm not saying this. I mean, if it's popular, maybe this can be, we'll do trader interviews on Mondays, and this could be like a Tuesday segment. Or I don't know, maybe this can just be a Monday segment every now and then. I don't know, but I'm asking for your feedback. I would love to hear your feedback on what your thoughts on, this kind of whole structure and this setup was. And like I said, if you hate it, that's fine. I'm not offended. I just thank you that you took the time out to leave your feedback so that I can kind of know where this stuff stands. If you're like, Clay, look, man, this has nothing to do with trading per se, so it shouldn't be on there, then maybe I could take this sort of segment and start a Money with Clay podcast. Maybe you would argue this would be better for like just more so personal finance in general. Like I said, I don't know, but what I have learned in business is you don't know unless you unless you can try. And also just listen to people. Listen to people that offer up good, solid, constructive criticism, that offer up the feedback, because you can learn a lot from those that are listening. So I am listening, and I look forward to it. So again, don't let the media play you like a puppet. Think for yourselves. Look at situations and look at them in the sense of, how can I make this situation work for me? And in this whole tax cut situation, You should now have a very clear understanding of how you can make the situation work for you. And I don't know, for many of you, maybe it just starts with getting a budget into place, finally taking control of your finances, taking control of your life so that you can begin to save. And when you can begin to save, you can open up a broker. And when you have a broker and you have savings, you can buy stock. And when you buy stock, voila, you are now a shareholder. You are now an investor, and you are now benefiting from all these things that these supposed evil tax cuts, did. So there you go. That's how you make the situation work for you. I hope you enjoyed this. I do feel better. I got it off my chest, and I gave my 2 cents on it. But yeah, please don't let the media, don't let others tell you how to think. Because in many cases, especially when it comes to the media as a whole, they are quite misleading.